Hi, this is Joseph. It is Friday. It's May 7th. Today was non-farm payrolls. What we're looking at is the pound dollar. I wanted to show you a trade that we've executed a few different times. It's basically the same trade setup, but I've had opportunities to trade it throughout the week. So with the trade copier, very often I get the question, are you swing trading? Are you day trading? And with the trade copier, what I prefer to do when I execute trades for the trade copier is to day trade, so that way we can close each day with some profits. Sometimes when you take on a bigger position that would be more like a campaign or something that you might be in a trade for a couple of weeks to a couple of months, and that gets pretty exhausting if you're looking to earn money quickly and almost every day. So that's again the reason why I prefer to day trade. But this method, what I'm using as far as point and figure, you've probably seen some of my other videos on the YouTube channel where I'm counting the waves, and I'm looking for reversal patterns, things like that are very, very effective. And I'm also using Wyckoffean logic and price structure to analyze the phases of consolidation, such as accumulation and distribution, and then waiting for the breakouts. So when I'm doing that, I'm also waiting for the entries to appear on the point and figure. So you'll see in some of my videos that I actually have a bar chart or a candlestick chart next to the point and figure chart, and it would be relative to whatever currency pair I'm trading. So again, in this example, this is the pound dollar. So this was a trade that we actually executed earlier in the week. We did have a couple of opportunities last week with this one as well. But again, for day trading, it gives me an opportunity to get in, and based on the data, I actually have a video on the YouTube channel. It's on the website as well. And this particular trade right here gave me several opportunities to trade this, but you'll notice that the target, and I was talking about this when I initially put this video out earlier this week, the first trade here gave me an entry at approximately 1.3835, and then the first target was hit here. And then with the data, and I had mentioned this in the video that I created at the time that I had taken this trade with the update and the performance, I talked about that if this trend is going to continue a lot higher on the pound dollar, where would be what would be the next logical target? And very often with a lot of inexperienced traders, they don't know how to calculate that. And with a lot of other signal services or trade copier services, if it's a real human being, a real live trader who's executing those trades, if they don't understand these principles, then they don't know how far price could potentially move on some kind of initial breakout. They don't know how to analyze the phases of consolidation. They don't know how to use point and figure. And the reason that I say this is that for the most part, and I've been trading for just over 20 years now, and I've used several different methods of trying to determine how far price will go on some kind of a breakout. And very often what I see is the mistake that I used to make when I first started trading is I would use the Fibonacci tool. And there's nothing wrong with the Fibonacci tool. Sometimes it works, but it's not as effective and it's not as consistently reliable as point and figure. That's the issue. So with a lot of other services out there, if they don't take the time to learn how the markets work, how to analyze the phases of consolidation, and how to use point and figure, then they're for the most part guessing. Sometimes, again, the Fibonacci tool will line up with a particular price swing, and then price will land right at a specific Fibonacci extension target. It happens, but it doesn't happen frequently enough to justify using that particular tool all of the time and then saying that that's the only way that you trade. You should always be looking to improve your performance. That's what I do. Over the course of my 20 years, I've never stopped learning how to trade. I've always looked for more information, and I probably will continue until I stop trading, always looking for more information. And I think that that's a sign of a very good, effective trader who's always looking for ways to improve and to eliminate the waste in my business and the things that I do. So again, the Fibonacci tool was not as effective as using point and figure. Point and figure works like this every single time, over and over and over again, if you know how to use point and figure and you know how to construct your point and figure charts. That's the key to it. So it takes a lot of time to learn how to use point and figure. That's one of the disadvantages and why a lot of people stay away from it. They don't understand it, and because they don't understand it, when they look at it, they go right back to the simple technical analysis tools that sometimes produce results. And again, it's okay for some people that just want, some winning trades, and they accept that there's going to be some losing trades. And I understand that losing trades is part of the whole deal. That's part of trading. But again, you can improve your performance. You should always be looking to improve your performance, and that's what I do. So that's how I ended up finding out about point and figure. It's actually a method and a tool for those of you who are unfamiliar with point and figure. It's something that's been around for well over 100 years, and some of the greatest traders in history used point and figure to make just to amass large sums of money as they traded, and they actually did it by hand. They didn't have the use of computers back then. So certainly today it's a lot easier to use point and figure once you understand the mechanics. And I want to draw to your attention that not only based on the data here, with the initial breakout down here at the lows where I'm moving my cursor, it gave me a first target, which we traded to, which was a great trade. But there was also a final second count, which was up here at 1.4000. 4001 to be more accurate, 1.4001 on the pound dollar. Now this was obviously earlier in the week when price was sitting right around here at 1.3880, 1.3890, and then it hit and went through the 1.3900. So what I'm getting at is that very often when you get an initial move like this in a breakout, you always want to find a first target, which is what I do. It's very conservative. I know that price is going to hit that first target just in case it doesn't go any further. And if there were signs of weakness and some kind of a turning point where price would start to move downward and we'd get a new downtrend, then I would see signs of that. Then I would no longer be looking for the second target. I could see that things were unwinding and, perhaps looking at a 4-hour chart or a daily time frame. Now looking at the daily time frame, during the last couple of days leading into non-farm payrolls today, it looked a bit choppy. And I can tell by looking at the daily time frame, the closing prices, and looking at those candles and those patterns at those specific levels of support and resistance on the larger time frame, that it was going to be choppy. So it was choppy yesterday on Thursday, so I only had one quick short trade. Again, it was a sell opportunity, and it's relatively fast. And then you get another sell opportunity, let's say after non-farm payrolls. It's something that you have to be prepared for. But I have to realize that the uptrend isn't over with just yet, and that's what point and figure helps me identify. And I share all of this with you because this is exactly what I do as I'm analyzing these trade opportunities before I execute a trade. And when I execute a trade, I continue to manage the trade to make sure that everything is intact as I expect it to be, so that I can either continue to hold on to a trade or get into a second entry opportunity to trade more of this uptrend when I get a signal. It's important that you know that, because if anybody's going to be executing a trade for you through the use of a trade copier, you want to know what that trader's methodologies are, what kind of system he's using, and how much experience does he have. Does it work? Does the system actually work? So this works every single time. I know I make a lot of videos and I don't really show too many losing trades because there just aren't too many losing trades. Occasionally, if I misread something, there could be a failed trade, but I can always earn that loss back right away on the very next trade. And I move on. And I'm very, very particular. So one of the other things that point and figure helps me do is it helps me avoid these ranges of choppy consolidation. When I used to trade that back in my first year of trading, the first year of my trading career, it was very choppy. I didn't understand how to read consolidation, so I would just trade off of candlestick patterns, and that would get me into trouble. I would have a winning trade, then a losing trade, and a winning trade, and maybe two losing trades. And by the end of the week, I was either at break even or I'd be slightly negative. So that wasn't helping, trading off of candlestick patterns exclusively. And then some of the indicators that I was using, they weren't really helping me all the time. They kind of added to the idea that I would have some winning trades and some losing trades. But again, once I use point and figure, I always know where it's going to go as long as the structure remains intact. So it's really important to realize that earlier in the week, I had identified this target, and it's also available on that video. You can see the final target up there at 1.4001. And that was a long ways out, right? That was a few days ago, and then leading into non-farm payrolls, it actually created an opportunity where that trend would continue one more time, run right into the 1.4001 level, or the 1.4000 level, and stop. And currently it's sitting here at 1.4004. That's how accurate point and figure is. It does this over and over and over again, regardless of what I'm trading, whether it's a Forex pair, a stock, a commodity, an indice. It doesn't really matter. Crypto, it works the same way. So it's a matter of how you construct the point and figure charts. That's the key, to mimic whatever it is that you're going to be trading. So again, with the trade copier, if you're going to use my trade copier, realize that these are going to be, for the most part, day trades. I want to get in and get out of the trade within the same session, maybe within the same day. If it takes a little bit longer, sometimes price will just go sideways for a little bit. That actually happened earlier in the week. I got into a trade, took a little bit longer than I thought, and then eventually it popped right up and hit my target, and I was able to get out of the trade. So I use this method, this strategy, on any currency pair that I trade: the euro, the dollar Canadian, the Australian dollar, the dollar yen. It doesn't matter. It works the same way every single time. And the interesting thing about point and figure is that when you use it correctly, everybody sees the same entry. It's not like everybody in other, let's say, other groups or communities where they're sharing their trading system. Everybody's using different indicators. Other people will use, the Fibonacci tool in a different way. There's so many different variables, but it's very, very clear. There's no, it's almost like that binary code idea where you have a yes or a no, right? It's either the 1 or 0. It's either an on or off switch in a sense. And what I mean by that is you can see very solidified levels of resistance, very solidified levels of support, and I don't mess around. Like, I don't get into a trade unless I get a signal with the point and figure, but I'm always watching the candlestick and the bar charts for which gives me the opportunity to analyze the phases of consolidation. There's a very specific phase of that consolidation when I can determine that smart money is about to make a bigger move and it starts to break out, which is in phase C. And you can see here, by the time I get these tests and these pullbacks, I get entries like this, and they move pretty quickly. And I can take quick pieces of the trade, get out, wait for another opportunity. Here's another entry. Let me get my crosshairs here, and you can see there's another entry right here, which then drives right into that last final target. Now, this final target, again, was based on the data that was over here to the left. So again, I'm going to be looking for a first target, sometimes a second target, and then a third target. If there isn't a second or a third target, it's just a first target and a second target. And it's all based on how much data there is here and what the consolidation or the accumulation or reaccumulation phase actually looks like. That's what I was talking about earlier in the week when I talked about this initial setup, and I was also hinting to the idea that this could probably continue and go right there to the 1.4001. Let's wait and see what happens. I didn't know when it was going to happen, but you can see that this thing relatively, for the most part, stayed within this range of consolidation. So we had a breakout. It moved up, created a new range of reaccumulation, and then another few breakouts here with different entry opportunities based on the patterns that I trade with the point and figure. There are very specific patterns that I'm also looking for to allow me to get into these trades. So these are big trades. We're not scalping. We're not making 2, 3, 4, 5 pips. We're making, on the low side, even if it's a short-term trade or very quick trade. Let's say I can apply this to a 5-minute point and figure chart, so something that would resemble a 5-minute time frame, and so I would be in and out relatively quick, and that could, let's say, generate 12, 13 pips. But that's not really what I'm doing with the trade copier. I want bigger trades. I want 40 pips. I want 80 pips. I want 120 pips on these trades, and that's what you're going to get. So if you're using a standard lot and I pick up a trade and it hits the target for, let's say, 90 pips, there's a total of $900 if you're using one standard lot. If you're using mini lots, it could be the equivalent of $90. So every one of these trades is designed to be a relatively big trade, and I'm not looking to hit home runs all of the time. That's not what this is about. I'm just simply waiting for the point and figure and to analyze the phases of consolidation so I can get in phase C. I'm waiting for the point and figure to give me my entry so that I can calculate how far it's going to go. Again, Fibonacci tool, if I look at all of the data from my 20 years of experience, when I use the Fibonacci tool, I would have some winning trades and some losing trades. When I got better at using the Fibonacci tool, I would have more winning trades than losing trades, but I was still having a big portion of losing trades that I know I could do better on. And then when I started to apply point and figure, I almost eliminated all of my losing trades. I can take trades over and over day after day and not have any losing trades, and then occasionally one will pop up because maybe perhaps I misread the charts, or there could have been some kind of technical issue that I just wasn't looking at. And again, when I have a losing trade, I can always earn that loss back really quick. So that's what you get with the trade copier. This is what you get. This is what I do when I execute the trades, and these trades go into my MT4 account, and the trade copier copies everything that I do and automatically opens the trade in your MT4 account. And then when I close the trade at these targets, the trade copier within a split second, it will close the trade out for you. So I manage these trades for you so that you can make as much money as possible. I didn't have any losing trades this week. I traded with non-farm payrolls. So you might be wondering, do I trade the news? And I do trade around the news, and I take into consideration that there's news available and it might have some kind of an impact on price. But I don't jump in the split second that the news is released. That's called like news trading. Everybody's probably tried it if you've been in the business long enough. I used to do that. I would scalp with the news, but a lot of things can go wrong with scalping with the news, or trying to trade the split second that you hear the numbers, because you can see price move up and then all of a sudden it spikes right back down within like 5 seconds. Sometimes you don't get the right fill. I don't do that. I don't trade because of the news. I wait for the news to give me my setup, and very often I'm in the trade. Let's say if I'm not in a trade, but then like today with non-farm payrolls, I wait about 20 minutes, and it usually doesn't take much more than that. Sometimes it's let's say 15 minutes, but usually it's like maybe 20, 25 minutes after non-farm payrolls if it's going to create a breakout and it's going to create an opportunity. and then I get my signal. And I don't do anything until Point and Figure gives me the signal to get into the trade, because I need to know how far price is going to go and how long I can hold on to that trade. If I hold on to a trade too long, but I don't know where it's going to go, which is the mistake that a lot of people make, they have some profitability in the trade, but then they give it all back and they lose it because it reverses and they don't know where to close their trade. That's what Point and Figure eliminates. It tells me precisely where it's going to go, and it works like this over and over. I've been using Point and Figure for years, and this is why I get the results that I get with the performance on the trade copier. It's why I can promise my subscribers over 10,000 pips per year if you use the service month after month. So it'll help you grow your account. You can leave the money in your account. You can do whatever you want. You can withdraw it. I have some subscribers that leave the money in their account and they let it roll over, and they do it for about 6 months to a year, and then perhaps if they need it, they'll take some of the money out. Other people will take out the profits. I have other subscribers that will take out the profits every single month. It's all up to you. Nobody can control what you do. It's your money. The only thing you do is pay me monthly to trade like this for you. Right now, the subscription is $79 a month. You can cancel anytime you like. And again, if I ever experience a losing trade, I can always earn that loss back right away. I haven't had any losing trades in a while. Otherwise, I would show you. I don't have any problem showing you why a trade failed, because I want you to see that I can earn the loss back if I have a loss. That's what I've done in the past when I show some of the trades that were failed trades. I immediately, after I've earned that loss back, I say, here we are, right back on track. I was able to earn back the loss. This was my mistake. This is what I can avoid doing the next time, and then I move on. I make very few mistakes. I've been doing this for 20 years. These are the results that you would get. Basically the same results that I'm getting in my the same performance that I'm getting in my personal trading account. The only difference is perhaps the size of your trading account. If you have, let's say, $3,000, $4,000 in your trading account, you might be using, let's say, something smaller than a mini lot or whatever you're comfortable with. We can't control that because you specify the lot size. With the trade copier, you can actually enter in what you want as far as the lot sizing when the trade copier executes a trade. So it's up to you. But again, I always recommend using small, low leverage to start off with until you're comfortable with the results, and then move on. But this is a big deal. This is a really big day. So again, if you are ready to sign up to use the trade copier, there's no long-term commitments. You can cancel anytime you like. Go to the purchase page, and you can complete the checkout. Once you complete the checkout, you'll be redirected to the members area. Inside of the members area, you'll watch a quick video that will explain exactly how to attach the trade copier to your MT4 account. And from that point on, I take over. So by Monday, you could have everything ready and set up, ready to go, and I would be trading. And you actually don't need to execute any trades to earn profits in your account, because I will actually be trading for you. But if you want to execute trades in the same account, you certainly can. There's nothing that would prevent you from doing that. It wouldn't have any impact on my trade in any way, unless of course you're trading in the opposite direction of the pound dollar. If I'm going long and price is moving up but you're trying to short it, that could be something that would change the bottom line result in your account, but it won't change my trade. It won't close out my trade at all. So the trade copier is a really good, effective trade, and you'll have access to it immediately after you complete the checkout, and you can have it connected within 10 minutes. Thanks for watching.